Hi everyone, I want to go over the analysis for each futures product and we'll begin with gold and silver. So gold does go sideways for now. Silver actually exploded upwards in the price and it's going in a somewhat of a channel upwards. Now in terms of the volatility for gold, it went up a little bit, but still volatility is really low. And if we take a look at silver, volatility is actually perfect. But at the same time, if we take a look at the seasonality for gold over here, which again depends really on the geopolitical situation. Currently, it does somewhat follow the seasonality. While at the same time, if you look at silver, let's see here, it's going to load up in 1 second. So silver, surprisingly enough, also follows seasonality pretty well. So exactly at that point, let's load up the interactive chart. But same thing happened for the 5-year average and 15-year average. The price around that time just shot up. So really interesting, even though this time it went up because of the tariffs for silver. Now overall, the supply is pretty stable for gold and silver, and the safe haven demand is up due to tariff uncertainty. So the key upcoming events is the August 1st tariffs, and there might be a good trade in the coming weeks only on gold because it's moving in a sideways trend, but not in silver because it's really in an uptrend move currently. If we take a look at copper, the price obviously shot up quite a bit because of the 50% import tariffs on copper, and it's not trading within the range that I've selected here anymore. So obviously this is a no-go for the most part for me, as I only sell strangles. Volatility is coming down. It's still pretty high comparing to the previous 3 months, and volatility might go up once more. And for the seasonality, it's probably not really following seasonality because of the fundamentals changing and because of the tariffs, obviously. So I wouldn't really count on this little chart to help me out. And overall, the supply is pretty stable. Now there is more demand to do the tariff uncertainty, so companies just keep buying copper within the US to avoid the tariffs on August 1st. So we'll see what's going to happen on August 1st. And obviously, like I said, this is a product that a trade is not an option due to the prices just being in a really strong uptrend. Natural gas is a pretty good product. I've had, I think, 3 or 4 trades so far this year since April. All are profitable. Around the price is a bit too low, but overall this is something that I'm looking to trade because the price is pretty much kind of like sideways moving overall within the big range. But if you zoom in, obviously it's kind of downtrending right now, but price will probably reverse back up, as we will see with the seasonality shortly. The volatility is really low. That's kind of a bad point. So we want volatility around 65 for me to be able to open really anything on natural gas. But at the same time, like I said, the seasonality is pretty accurate so far. So the red line is the 5-year and the blue line is the 15-year averages. So for now, as you can see, the price has been following pretty nicely and is expected to probably go up. Now it depends on the temperatures because so far I don't think we have that hot of a temperature going into the second half of July, but you never know. But this is something else to kind of take a look at. So supply is overall stable and the storages are building up slowly but surely. Demand is low due to the colder temperatures. And the key upcoming events are the weather updates across the US for August, which is, I think it's updated every day or so. So that's something really important to be looking at. The average temperature expected in different areas of the US, and the EIA weekly natural gas report on July 17th. So like I said, it might be a good position to open if volatility is higher and where the forecast is not extremely hot. If it will be, then price will go up and we might have an opportunity maybe a bit later on going into August or going into September even. Crude oil is another good product that I'm looking into. So currently it's still trading within this really nice big range, even though we had a few big price swings over what happened in the Middle East. Overall, looks pretty good for me. And we can get a really good range for the strikes. The downside is volatility is a bit low. Now, I would probably ideally want volatility to be closer to the 50s here to be able to open a strangle on crude oil. So for now, it's still a bit too low for me. And the seasonality is actually quite well. It follows the 15-year and even the 5-year, even though the average prices are a bit far apart, but it is the same movement, seasonality given for crude oil. So price is expected to probably go sideways for the rest of the month, and if we will have any opportunity in volatility, if price will shoot up a bit more, volatility will go up and we can enter a position. It will be pretty nice. Supply is overall stable. There are little tensions in the Middle East, and OPEC is increasing production, which means price actually might go up anymore. The thing is, the demand is overall stable, but it is expected to go down according to OPEC, so they expect the economy to slow down. So key upcoming events is the OPEC monthly oil market report, July 15, then July 17 for the weekly petroleum status report, and obviously the August 1st tariffs. Now, for now, it is actually out of limits due to many uncertainties, especially the Middle East tensions. So it might be a good trade once we get some clarity, once some things become more certain, but for now, it's just too dangerous to get into a position. And yes, I'm very picky, but this is just kind of what got me to this point in my trading career. So I'm going to stick to what works for me. Wheat is another pretty good product where you can clearly see the prices have been moving sideways within this nice range, where I'll be really comfortable opening a short strangle. And the bad thing is volatility is really low relatively to the previous 3 months. I would probably want volatility closer to the 30s. I'm not looking for anything super high, but obviously I don't want volatility to be literally at the very, very bottom when I sell options. So still, it's a waiting game for me. In terms of volatility, seasonality looks perfect, obviously. Price is expected to probably go up a little bit, which can increase volatility to levels I like, and then just kind of drop down. And from that point, maybe continue sideways. Overall, it looks really good. We might have a trade sometimes before the beginning of August for wheat. We'll see. For now, it is actually somewhat out of the limits due to the planting and harvesting season. But I'm expecting the next week or two, it's probably going to be way more clear, and we can maybe move forward with a position if everything else lines up. Supply is overall stable. Obviously, it's subject to change due to the harvesting season, and demand is overall stable. The key upcoming events is the USDA crop progress report on July 14. So we'll see what's going to happen. And hopefully volatility will go up and the crop harvesting progress will go well. The last but not least is soybean futures. You can see price is beautifully moving within this channel, which is again really good for me as a neutral options trader. Bad thing is, again, volatility is really low, and you could have seen this week most of the products are having a really rock bottom volatility. I'm looking for probably something closer to the 18th CVOL index volatility to be able to open a good position on soybean. Now, in terms of seasonality, follow seasonality perfectly, and price is expected to probably maybe go down a bit, but then up towards the end of August, which can spark more volatility, and then we can easily open a good position for a good price with very, very low risk. For now, again, supply is very stable. It is again subject to change due to the harvesting season, and the demand is overall stable. It might increase due to the biofuel mandate, which was implemented a few weeks ago, where they need to mix more of the soybean into the biofuel. But this is something that will take quite a long time, so this is not an immediate demand increase. And the key upcoming events is the USDA crop progress, July 14, just like the wheat. And like I said, this one is no different than the other grains, so it's out of limits for now due to the planting and harvesting season still being in effect. So we'll see how things end up towards the end of the month. For now, obviously, volatilities are really low, and we have the tariffs. But overall, this is the supply and demand analysis for all the futures so far for this week.